welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. In this edition, we are going to take a hard look at the first quarter GDP numbers released by the CSO, the Central Statistical Organization, on Friday. And hopefully, by the end of the half-hour discussion with my very level-headed panelists, we will have more light than sound. Unlike the heated discussions after the release of the back series GDP data by an expert panel headed by none other than Sudipta Mandal, who we have here with us. So, let me welcome to the show T.C. Anand, former Chief Statistician of India, for whom the government incidentally has still not been able to find a replacement, and Sudipta Mandal, eminent economist who has worn many hats in a distinguished career. Let me start by asking both of you in turn the obvious question. How would you interpret the Q1 GDP data? As an indication of an economy that has got over the bumps of demonetization and GST, or is it still much too early to say? Let me start with you, Anand, as someone who was still recently Chief Statistician of India and knows the inside story, as it were, of GDP estimation.
As far as I am concerned, I will simply refer you to the statements I made last year at the end of the first quarter numbers, when the number had come in quite low, and I said that, look, this is completely explicable in the context of the implementation of the GST, and in fact subsequently I had gone on to assert both in the second quarter and later that you will see the trend of increasing growth going on. So this number as such doesn't surprise me, and some commentators have pointed out that there will be a base effect at play, and they are quite right in saying that that is true, because given that the first quarter last year had come in low, particularly in manufacturing, that has given a boost to the growth estimates as a natural statistical artifact. But the broad trend, if I ignore the year-on-year growth but look at the quarter-on-quarter growth, is consistent with the pattern of recovery which had been identified last year itself.
Sudipta, would you agree with Anand? And when we talk of recovery, would you go by the growth figures reflected in the output method, or would you prefer to give more credence to the capital formation numbers reflected in the expenditure method? Sudipta?
Yeah, well, first of all, quite a few of us have been writing since the first quarter of the last fiscal that the economy had bottomed out and it was sort of moving on to a recovery path, which is pretty much what T.C. Anand just said. And I have also been saying that it is not just the growth numbers, but in fact, if you look at the growth of gross capital formation, I do not mean the ratio to GDP, but the growth in real terms, that has also, it turned around exactly the same time in the same quarter after last year's first quarter, and that has also been moving up. Of course, the aggregate capital formation to GDP ratio is still not gone back to its earlier peaks, but it is beginning to look better. So this is I'm not surprised. I'm very pleased to see that the growth has been sustained. What I am surprised about a little bit is the extent of the jump, but I think also again, as T.C. Anand just mentioned, because you were at the bottom in the same quarter last year, so you are getting that base effect, and probably by the second quarter and third quarter you will find that it will come down a little bit. More towards our sustainable potential growth, which I think for the Indian economy now is between 7 to 7.5%.
Well, it's good to know that both of you agree that the economy is recovering. But Anand, the fact is that the expenditure method is usually seen as much less dependable for a variety of reasons. So would you agree with Sudipta entirely? Also, for the benefit of our viewers, not all of whom may be familiar with the intricacies of GDP estimation, could you very briefly explain the need for two separate methodologies?
Let me start off by saying that, at the stage of quarterly estimates, the data from which expenditure calculations is made is actually quite thin. It's only in the domain of government final consumption expenditure that we have reasonably hard data. Both on capital formation and private final consumption expenditure, we do not have direct data at this stage. It is actually inferential data which we derive from the production data which is available to calculate the first quarterly estimates. Expenditure figures become more robust only when we are in the position of compiling the first revised estimate, which will be for quite a while from now. So that perspective needs to be kept in mind, because the revisions within expenditure categories sometimes can be large. But what Sudipto has said, I'm not going to disagree, because the broad trend of growth in capital formation is borne out by the fact that IIP in terms of capital goods has also been showing a sign of revival. So to that extent the numbers are consistent. But I would like to tell people not to make too many fine classifications on expenditure based data at this stage, and wait until the first revised estimate comes out, which will be in 2000 and in this case 20 January.
You made a very valid point, Anant, that it is a little dangerous to jump to conclusions, because the fact is, and Sudipto, here is what I want to bring you in, frequent revisions are in fact part and parcel of the GDP estimates all over the world. Yet there is a sense that revisions are some kind of a black mark and cast doubt on the credibility of GDP estimates. How can we really dispel this impression as far as the ordinary citizen is concerned?
Well, I guess there is no option except to make the point that, you know, information flows in bits and pieces. So you will always have, you know, as TC was explaining, you will get advanced estimates, then you will get the provisional estimates, which have a stronger, more robust database, and then you will have the revised estimates, the final. This is standard, sort of feature. Not only over time we've always had this in India, but this is it goes on also in the rest of the world, because the data is flowing in gradually. All the data is not available at the same point of time. I guess there is no option except to make that point clear, that revisions will happen, and there's nothing odd about it.
I think economists need to speak out more and explain that revisions are par for the course, they are not necessarily motivated. So from that perspective, Anant, given that GDP revisions are par for the course, is Q1 more prone to revisions relative to other quarters? In fact, RBI recently brought out a paper on how frequent GDP revisions complicate policy making, and Subbarao, the former governor of the RBI, famously said that the stimulus package could continue much longer than warranted, merely because the GDP numbers were subsequently revised upwards and initially suggested the economy was still in need of support. Can we minimize such risk? Are there any alternate techniques? We've heard of nowcasting, etc. Can we use more high frequency indicators? What do we do to get out of this kind of conundrum, Anand?
I think there is a considerable degree of misunderstanding about revisions and the scope for nowcasting and so on. First of all, the RBI paper unfortunately had some methodological flaws, and it will take me too much time to explain them, but suffice to point out that they have mixed up about revisions across different base revisions, which is a serious complication. Revisions happen because different data sources become available at different points in time. Revisions also happen because when you are doing estimation for the full year before the whole year has been completed, you are making projections on things which have never happened. Now, I'll give you one example which Dr. Subbarao would have been aware of. Governments make budget estimates, government make revised estimates, and government make final estimates of expenditure. And as finance secretary, he often ended up with a final expenditure which was very different from what he made as the budget estimates, and the reasons are well known. Now, the national accountant is in a bit of a dilemma. He projects on the basis of the budget estimate and ends up with an actual which is based on the actual expenditure. Now, it would be too much to expect him to have known in advance what the government is going to do at the stage of when it was making the budget and make corrections for that. Now, by the same logic, nowcasting also suffers from the same limitations. I think nowcasting is important. I don't want to, it will give you an early estimate, but the domain of revisions will only increase with nowcasting, not decrease. I think one of the problems is analysts stick their necks out on early estimates, then are caught looking foolish and want to blame the statistician for what was really their problem. They should have pointed out that an early assessment based on projections and early data is much more fraught to risk. Unfortunately, analysts make much more categorical statements than a statistician will ever do.
Absolutely, Anand. That was a very vigorous defense of statisticians and economists. And I'm sure Sudipto will agree with you, large part of it. But how wise is it, Sudipto, then to extrapolate from a single quarter's GDP to get numbers for the whole year? In fact, we find this not only in India, but also in the US, where they work out the annualized growth from a single year, quarter's growth. And in this matter, which are the sectors where this kind of extrapolation seems more problematic? Sudipto?
Yeah. First of all, it is unavoidable for people who are making decisions on policies, that is whether in the government or in the private sector, the corporate, they have to make their plans for activities that they will undertake. So they need to have an assessment, and the more robust the assessment, the better it is. However, for reasons that TC has been explaining and I have been explaining, you cannot have at the time of when a decision is being made exactly what will happen in the course of the financial year and so on from one quarter to the next. In that context, I think some of the work being done now, this is getting a bit arcane, but on forecasting techniques, leading indicators based forecasting, they have become pretty good, and I think we need to make more progress along those lines. We ourselves do some of that, but these must be recognized for what they are. They are just indicators to help policymakers make ex ante policy decisions before the event. And while on this, I would like to say, for instance, that the Monetary Policy Committee, I think anticipating that inflationary pressures will build up, they raised the interest rate, as you know, and I think that was that's exactly what they should do, think in advance of what's likely to unfold and take decisions based on that assessment. In this case, they were right, because along with these GDP numbers that you've seen today, you may also have noticed that the planned fiscal deficit for the year, 2/3 of that has already been used up, and the government has in fact, on top of I mean, it's really on a expenditure pump priming election sort of mode, I think, because in real terms, from nearly 14% growth in public administration, defense and other those services, you've got another roughly 10% growth in this quarter. I mean, I'm comparing quarter over quarter, and this is probably not sustainable, the kind of growth that is going to pump prime. The 8% thing, I think, is actually already reducing our output gap. The bottom line is, I think inflationary pressures are going to build up on top of the fact that you already got some of that imported through elevated oil prices. And so I think this is an illustration of where anticipating inflationary pressures, the RBI taking action to anticipate that and try and offset that was a good move.
Yes, indeed. In fact, it just shows that policymakers have a tough job. It's very difficult for you to know in advance what the future is going to be, but that's a disadvantage that they have, and an advantage that analysts like us have, that we can look at the wisdom of hindsight. But I'm afraid it's time for us to take a very short break, so please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion with Sudipto Mandal and TCA Anand on the intricacies of the GDP estimation and what are the kind of conclusions we can draw, what are the lessons, what are the opportunities, what are the challenges, what kind of policies can we frame in the light of the numbers that we just got. Anand, before the break, I was asking Sudipto that are there any particular sectors where it is even more difficult to extrapolate from a single quarter's number? Can you, with your experience in the statistics office, let us know which are these sectors?
Sure, but before that, let me just correct something on which Sudipto said. I think I should point out that things are a little more complicated than what Sudipto implied. Sudipto referred to the fact that government has reached 2/3 of its planned fiscal deficit for the year. That number is very difficult to read, and I'll explain why. Because the expenditure profiling over the year and the revenue profiling over the year follow very different trajectories. So the deficit actually has a very peculiar behavior, that it rises in the early part of the year and then falls towards the budget estimates towards the later part of the year. So just because you have reached a very high proportion of the fiscal deficit for the year early on is not necessarily a signal of pump priming. You have to look at the expenditure vis-a-vis what was projected. So that's one correction to what Sudipto said. Secondly, I think inflation forecasting is a much more complicated story, and certainly while RBI should be doing that, I think they may find that their estimates have gone off again on that front. But having said that, now what are the difficulties of projecting into the future in terms of going from quarterly estimates to the year? One major area is agriculture. If you notice in the first quarter GDP, the agriculture estimate which you've got is actually a consequence of the agriculture year which completes in the month of June. What we are now going to see is that in agriculture estimates in the remaining 3 quarters is what happens in the current agriculture year, which is the monsoon which is currently going on. Now, if you read the Met reports, you will find that the monsoon has had complications. It's unevenly distributed. There are parts where there is excessive rainfall. Now, how will that feed into agriculture production? We will probably get an assessment of that only towards the end of September, and more likely in December, when we get a sense of how well it could lead to improved growth, because areas which had been seeing low rainfall, particularly in oilseeds and so on, may actually see a bump in productivity. But the challenges in agriculture in forecasting from the first quarter to the end of the year are huge. There are also problems in manufacturing, but manufacturing is somewhat more controlled and more easy to predict. Agriculture tends to be a much bigger problem.
So agriculture is a bigger problem. So Sudipto, would you agree with that assessment that agriculture perhaps is the one sector where it's very difficult, and given that so many lives are entwined in the agriculture sector, this becomes a very big issue for the government?
Yeah, agriculture, because it's so heavily dependent on the monsoons, so it is really at the end of the monsoon that you get at least some basis to make some kind of an assessment of what is likely to happen. And I think, as T said, this year we started off with an uneven distribution. Large parts of north and eastern India were actually deficit when there's surplus in other places. I think that deficit is being made up now, but we won't really know till the next couple of months in the monsoons where we stand on that. So what you're seeing now, this revival of growth that in agriculture is seeing, is really based on the Rabi crop that has come in, and we don't know what's going to happen to the Kharif at the end of these monsoons. Agriculture is a sector which, unlike manufacturing, is not really sensitive to demand side conditions, and to some extent, I mean, I would also say about the same thing about what you might call the public services, which is driven by public expenditure, that these two are autonomous of demand conditions, unlike manufacturing. So it's good to look at these, what you might call the core economy, that are without agriculture and public services, as a separate thing, and in order to make assessments and make separate assessments for agriculture. I think the public expenditure part is more predictable because you have a budget, not that it's going to be, it's after all just a plan, and actual spending may differ from that, but you do have a sense of which way public expenditure is growing. And as I had mentioned earlier, public expenditure in real terms actually has been growing at about 12% a year. It happened last quarter, it happened this last quarter, I mean of last year, first quarter of last year, it happened again this year. And in my view, that is now, given the pace of growth we have and the potential growth of the economy, which I assess at around 7 to 7.5%, so do others, this is probably excessive.
Anand, but precisely because of all the problems that you and Sudipto had elaborated, both in the computation and also extrapolation, can we really draw any policy lessons from the numbers of the first quarter? What about the trade-off between short-term stimulus vis-a-vis the long-term economic reforms that really lay the foundation for subsequent growth? How do governments kind of take a decision on the trade-off?
You know, the issue of policy is, there are many issues to what policy conclusions one needs to draw. I think it's important not just to look at the first quarter numbers, but also to look at the revised estimates which were presented at the earlier part of the year. And there are concerns flagged while capital formation has picked up, and it's certainly very important that it has picked up. Its composition in terms of public and private sector needs to be looked at. There is a need for much greater increase in private sector capital formation. There's also a need to ensure that household savings picks up. There are some concerns that that has not been picking up. So policy elements, there are many elements which are there which will certainly need to be addressed. And I think policy makers need to look at more the long-term trends and not just go from a one-quarter number. But the broad premise that your growth is back on track, and now even after major structural change like GST, you basically contained it in one or two quarters, is a significant size on the health of the economy. So you really are, I think, should draw conclusions from this. There is a need to maintain this, and there are many issues on what are required to be maintained. There will be issues of infrastructure, the bottlenecks which may emerge as growth rate continues and so on. Those will be need to looked at.
I'm sure you agree with that, Sudipto. Also, I must confess that despite my years as a hardcore journalist, I was quite taken aback by the kind of, the kind of discussion and the debate that we had post the recent release of the back series GDP numbers. As hardcore economists who are all too aware that growth is a continuum marked by leads and lags and is not a discrete event, were you as a head of that expert panel surprised by the intensity and the bitterness of the debate, Sudipto? And did you anticipate it at all?
Not really. We hadn't anticipated. In fact, that report was in the public domain for almost a month before all this happened. But I think it was triggered because, as journalists want to do, you look for things which are going to, be sort of headlines. So you do hype, exactly. You compare what happened during the Congress period against what happened in the NDA and all that. And once you do that, of course, the political leaders don't have a choice. They have to respond to this. They can't ignore it. And I think that's what largely accounted for it. But I must say, what I was very happy to note is that most of the professionals who commented, as well as the political leaders, they mainly were talking about the policy implications, of these different growth periods. Whether the NDA, the UPA had been doing too much pump priming and so forth, and even there I think there was some consensus. I remember at least in one television interview, Mr. Chidambaram saying that, of course, he was very polite because this happened during his successor Pranab Mukherjee's period, but he said, with hindsight, I think maybe that third stimulus I would not have given. And yesterday I remember Montague writing in the Mint saying that probably the stimulus was kept on longer than necessary. And as you know, we did see a period of inflation following, high inflation following after that.
It's absolutely really good to know that the CSO, in fact, nobody really questioned the CSO's credibility. That's very heartening. Anand, but do you think that GDP numbers tend to get more politicized in terms of commentary closer to the election year, Anand?
Yeah, that's because everything in India gets politicized closer to the election year, and the tendency to view everything from the prism of politics is unfortunate. In fact, what I wanted to point out is the fact that the way I read Sudipto's committee report, which is what should have happened, unfortunately did not have. You see, what the committee report points out are that what is the issue involved in making the back series, and that there are various methods of doing it. They actually only suggested that here is an exercise done by a set of researchers which also can be considered. What was necessary, and which is unfortunately why public discourse on these things gets extremely complicated, is there was virtually no discussion on the manner in which back projection should be made, which would have been a very useful discussion to have had. It got taken up by a comparison of outcomes assuming that a particular calculation was correct, and without having had the discussion on the appropriateness of how to do projections, how to do splicing if you like. We have ended up really talking at cross purposes.
Very true, but unfortunately I'm afraid, and here I confess it's mea culpa as far as media is concerned, we never read the entire report and tend to jump to conclusions. So thank you so much Sudipto as also Anand for making it clear that the economy does seem to be on recovery and GDP estimates are complicated exercises, and it's best if you leave it to economists and statisticians. Thank you so much for joining us and clarifying those views. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.